Hey everybody, hope you're all well. Welcome to another episode of EGIL.TRADE, brought to you by the Let's Talk Crypto podcast and proudly sponsored by CryptoFish.com. As you can see up behind me here, I've got the CryptoFish.com platform, easy to use, non-custodial platform that you can use to buy or exchange, store, earn, send Bitcoin. You can use debit card or credit card, ACH, SEPA if you're in the EU, UK foster payments if you're in the UK, US wire, and ideal payments for the Netherlands and Poli for Australia coming soon. There's an easy to use and absolutely for free learning section with Bitcoin 101, Crypto 101, Blockchain 101, Cryptopedia, and a video learning portal, and of course our crypto podcast. Okay, let's jump straight into the fear and greed index today. We're ticking at a 48. By the way, I haven't looked at anything. Today, including the charts. So this is all fresh for me. So here we are, ticking at a 48, slightly higher than last week. We were sitting at about 40, and last month an average of 44. We're at 48 now. Still pretty much in the neutral zone. You know, this thing's only really useful if it's at an extreme read, and we tend to get a counter move in price action. So yeah, can't really glean much more than that, other than that it is ticking up. So people are getting a little bit more positive. The sentiment is improving. Right, let's jump straight into the charts here. Here I have the 1 month chart all lined up here. You can see all the different EMAs and MAs that I've got going. We're still living very healthily above the 21 EMA and the 10 SMA on the monthly time frame. We have come back down and tested below the 10 SMA, and potentially you could say maybe even a test of the 21 EMA, although, you know, when we're talking about such a high time frame, that price range is about $1,000 apart. That's all right. Let's throw in some drawing tools. You can see I've marked out the yearly opens 2018, 2020, 2019, all the way down to 2017 at the bottom there. I tend to find that they like to tag the opens, but if you've been listening to my show for a bit now and watched a few episodes, you'll know that I have mentioned that, and I tend to repeat it, but it's only because of the new people who maybe haven't been watching and want to get an idea of why I've marked those things out. I tend to find they do come back and mark the yearly opens. Well, at least the last few times. We haven't come back and tested the yearly open of 2020, although you could argue, depending on how you look at this, you could argue that we did test it and we've broken through. So will we come back and test it again? Who knows? We have come back and tested the yearly open of 2019. But right now, looking at just this let's take off the drawing tools again. Let's look at this weekly chart. Let's look at the moving averages first of all. We've come down in March. We've hit the 200 EMA and SMA, broken below, well below. And if I just do this, you'll get an idea. Come right down, and this moving average is the 377 exponential. We've come down. You can call it a test of that. We've regained it on the very next tick on the weekly time frame. Extremely bullish. We did go up a heck of a lot higher, but still got squashed back down below the 200 EMA, and again, and now that we're above, I kind of think that even on a weekly time frame, I think the low is in. I think the low is in here. If you look at this, we've come back down here, had an absolutely amazing bull run up here, even though it's sort of been distributed back down again, all the way back down to 3.6. I think that's it. I mean, to come back and retest this sort of region, even though we did go lower here, people stepped into the market and have marched us all the way back up. I am leaning towards that being the low in now on the weekly time frame. We have regained the 10 SMA subsequently, and then all the other moving averages after that, all the ones that count in my opinion. We've come back and tested multiple times, once, twice. We're here now, here. And we are looking to challenge the highs again of this upward movement. Now, this is all quite at a special time right now, because we are approaching monthly end. And even if you look on the CMEs, month end has closed. And it had a good close in my opinion. So let's just pull that up quickly. A decent close. Wait, hang on. That's not monthly. Here we go. Monthly. Here's the monthly chart. Okay. And I believe it's closed because that's the monthly candle here. And I believe CMEs will obviously open on Sunday, but that will be part of June's tick. So we'll have a new candle printed here. I mean, we have closed above this closing high here, not higher than this open. Okay, So it's important to note that it would have been a lot easier for me to read this if we had closed firstly above the high of this candle, secondly above the open of this candle, or if we had ticked above here, obviously, I mean, then we're off to the races. But we have closed above this high. I mean, not this high, this monthly closing high, right? So not the wick high, the monthly close high here. So we have closed above it. You know, I am leaning bullish here. I'm leaning bullish based on the CME. However, we do need to see the close, which we will see on Sunday. And right where we are now, not only are we closing above the local high here on the monthly timescale, also above the previous one. If we close in anywhere above 9,300 or 9,400, I would say, or 9,350 on a monthly time frame, I do think we're going to go and challenge 11,000. Challenge this next monthly high here, closing high, right? 11 to 11 and a half, possibly. And then that's where the fun and games begin, especially because you've got some wick highs here. So let's throw back on the drawing tools and see what that looks like. Let's go back down into a daily time frame. Let's have a look. What's happened here? We've obviously got this liquid zone order block that we've had for a while marked out. It's acted as resistance. We've broken through. It's acted as resistance, support, broken through, acted as resistance. We've come down, tested down the 55 on the daily, broken through, testing it back as support again. It's held, and we're launching off it. But equally so, this is acting as resistance. And you'll see now that I've drawn this trend line in here. Look how it's respecting it on a wick basis. Once, twice, three times. Well, actually once, twice, and almost to the tick. Probably better seen on a 12-hour time frame. Look at that. Hit, smash down, test support, gets liquidity, shoots up, gets liquidity, shoots up, and here we are now on this 12-hour time frame. And while we're on the 12-hour time frame, let's have a look at the stochastics. Still up. You never want to bet against the 12-hour stochastics. Still up, but it's getting into the sort of more heavy zone here. It's still got some room. I'd like to see it get to 94, 95, then potentially look for a little bit of a pullback. It's looking good though. It's looking healthy. RSI. We're above the exponential. Yes, we've had a little bit of a rejection from this horizontal here. Lower high. But potentially we could go up and challenge it. And I don't know, price action is looking a bit bullish to me. Also, if you look carefully here, higher low, lower high, lower high, lower high, high low, high low. What is that? Symmetrical triangle. That means we've got equal opportunity here. We could either break up or we could break down. Coming after a massive uptrend, I would lean to more continuation. Until proven wrong. Until proven wrong, more continuation. What else? What else can you glean from this? Higher lows in price action, lower lows in RSI. What is that? That is continuation divergence. Hidden bullish divergence, if you like. So I'm leaning to there being more of an uptrend here and us going a little bit further. And we'll just have to see where it takes us. But I wouldn't be surprised if on Monday we do make an attempt higher and try and get to around about the 10,000 area. If we do tick above that 10,080, I would say, I think we're going to go and challenge 10,700 very quickly, and if not, 11 to 11,500. So just based on that, let's go back down to the lower time frames. I know this is weekend, and by the way, I do have a trade on. I don't normally like to trade on the weekends, but I do. But I'm completely hedged. I've bought perps and I have sold futures. So I am hedged at about 9,550 at the moment, and of an entry price of about 8,920. So on the 4-hour time frame, what do we have? Stokes, again, rejecting getting into the neutral zone, wanting to cross back up, bouncing off this zone here, wanting to go back into the bullish control zone. Even the RSI is looking good. It has had a little bit of a rejection from the bullish control zone, but I think that if it can meet up here with the EMA, perhaps it'll have another challenging breakthrough and challenge this area over here. I am leaning more bullish than bearish again, and yeah, let's see what happens. I'm very much looking forward to seeing how spot and futures, traditional futures exchanges close on Sunday, to see if we can create that little bit of a higher high on the monthly basis. I think that is something to watch, because higher time frames may beat the weekly, which obviously the monthly will, and we could see us challenging 11,000. If not, if we do reject here again, because I mean, this is quite insane here. Look at this: reject, 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 reject. If we do reject here, well, then I'm less I'm less optimistic. I think that we're going to probably come back and test the lower 9,091, and ultimately I think we'll actually come back down to the the mid 8,000s to high 8,000s, and then reassess from there. If we do violate 8,600, well, then the southern route is going to take us probably into the mid 7,000s, and then my usual thing of us challenging a yearly open will probably come into play. Then we'll probably come back down to the yearly open of 2020. I'm not leaning that way. I am more bullish. Don't want to put you off. Have a great weekend. It's been great, and see you tomorrow.